Hey guys, good afternoon. So we were able to get it up off the bottom this morning. Um, Gapped down very badly on the first hourly candle of the Globex Open, and then the market was able to stabilize itself. We were at structural support on the day, 1.25 on the daily range. And we were able to balance. It took, a long time, and these were huge swings, by the way. The news came out about Trump um, potentially, pausing tariffs, and the market took off. But that was short-lived. It came all the way back down when the market realized that that was a fake news headline by the media. The person who, Kevin Hassert, never said what they portrayed his words to be. So they're just making news up to meet the narrative that they want to hear now. So that's really, kind of pathetic that they, are just trying to, fictionalize a narrative to meet what they want it to be. He didn't say anything like what they said that he said, but anyway, so we stayed inside, this daily range, um, pretty much the entire day. The 51, 52, 25 is the daily one on the close. And so very structural. We got up to 1.25 on the daily range on the close, 1.25 on the daily range on the open. So extremely structural. At first, I thought we were going to be able to get up to this 54.50 level because of that, the way the market was just going long, vol, long, um, which we didn't know, what was going on. It was just crazy. The SPX was backsliding. It did not participate, but the ES continued to move up. So there was that divergence, and I noticed it and tweeted that out. And then, of course, we found out that it was not the case. So for our weekly range, you can see here we tagged both the weekly 2 and the lower weekly 2. So this was like the 7-day 2 and the weekly 2 down here. So, and likewise, this upper weekly 2 at 51.6750 could be, resistance for overnight session. We'll have to see. 51.74, 5200 right here has probably got some resistance on it. And the monthly, you can see here we, came down to this um, monthly 1.75 times. That's actually 1.75. The 2 time is down here of this monthly range. So I think this is the 4-week, if I'm not mistaken. Yep. Okay. And it went up and touched to the tick 52.87, which is the monthly range on the close. Or is it the open? Oh, it is a 4-week. Sorry. So many lines. Well, it's important to have them like this. I, apologize for always checking what they are. Um, there just aren't enough colors and lines for me to separate the different weeks and months and days, but the the dealer algo trades to all of them. And why is that? Because they consider a monthly range for their intents and purposes on that monthly option contract to match the realized volatility, whether it's derived from a 30 calendar days or the way we calculate our monthly range is the number of trade days, the actual trade days in the month versus 4 weeks, as a group. So each one of those has its own volatility envelope, and it is amazing how the algos will hit these levels consistently. So, and you get a good framework if your volatility is elevated and you're going outside your line. Let me put where's my daily one on here and give you an eyeball look at this so that you can understand it. So I can overlay the 1 period. This is a quarterly range here. So you can see that the daily range went up to the quarterly too. If I were to change this to a daily, a 1 day range for the historical, here is what the whole Jats concept is in a nutshell. Whenever the R ball is inside the historical distribution, the market is small pricing and it does not break out of the range. But when you go outside the distribution, this is when you have a chance to go outside. These are the quarterly ranges. So I need to put a daily range back on here. Hang on 1 second. This is not a good representation. Okay. I see this has a little error in it real quick. That's got a line instead of a square. Hang on 1 second. There it is. Put that back on square. All right, so here we go. You see how it's inside the daily distribution from the 13th through the 27th? And you can see from the 13th through the 27th, it's inside the distribution. It did not go outside. So you can literally tell when you're inside or outside. You see how we're outside the distribution here, and you can see here the ranges broke, and here they tried to break, but the dealer stepped in and saved it. But definitely it came down, gapped way down to 2 times the range. And then here we went all the way down to 2 times the range also. Way outside the range. And then today we also went way outside the range. So this helps you when you're trading know whether, to try to reach for those edges or trade to the outside or position your, contract inside the distribution for your condors, trading inside, reverse to the mean futures trading, or outside going call spreads and put spreads, and or trading to the outside edges. And today we were trying to turn it around and bring it back in, but the volatility, here we go into our VIX, is still extremely, extremely high. We are in really, we went to 3 sigma on the open, and then they just crushed it all the way back down to the daily 3. And then we had this big freak out in volatility over that Trump said that he was going to do a pause on the tariff. Then they realized that it wasn't the case, and the volatility went all the way back up. And like I said, these are tails up here. So we were, staying out in the tails versus now we're back inside and then closed on the daily 3. So the volatility is still extremely elevated. We're at 47. I mean, that is extremely high. And here's the weekly. These are tails up here. Kind of hard to tell what it is. Hang on one second. Here we go. So here you can tell that very structural. The algos trade to these, even though this is outside the monthly range, 1.25, 1.5, 1.75, outside 2 times the monthly range into the next sigma. So 2.25, 2.5, 2.75, and 3 times, or wait, yeah, hang on, which one is this? This one is, this is 2.5 times the range right here that it went to outside the monthly range, 2.5 times outside the monthly range and came back in today. It's just insane with the way this volatility has been running. So will we get a continuation of the vol tomorrow? We could. I mean, we had a lot of volume come into the exchange today, more volume today than any other time since February 24th. And the volume wasn't for people looking to hedge because the volume off the open went straight down, right? So that was directional trading volume. And the VIX opened and they started crushing it back down to try to contain it. And that was our dealers. Our dealers came in and crushed the vol after that extreme spike. So the short vols, the short puts were closed and the long puts covered, and that's why you get the vol crush. But all of this intraday volatility, this was ripping the face off of those shorts. So everybody who tried to get short in the market just got destroyed today. So, I mean, it's like, don't lend a tear. It's going to cost them a lot of money to try to wreck our markets because um, even though they were able to get the trade off on the Globex Open, the dealer was able to get the liquidity back into control and got it turned around. It took a while, but they were able to control it. So they did a really good job, the market makers and dealers who stepped up to absorb that selling pressure that came into the market. Like I said, the highest volume since February 24th. So a lot to be thankful for with our markets being structurally sound. We have the most liquid markets in the world. So, um, but yeah, they're coming in right where they need to be. That's why it's so important to have these levels. The the outside fib levels, or these tails, are equal measures of the inside range. So you measure your inside range and carry it outside the three, one time, two times, three times, and that's where you get the one time sigma, two times sigma, three times sigma. You can even get up to six sigma events like you did at COVID, things like that. So, but they're very measured. And that's what the dealer relies on, these variance structural support resistance levels, so they know where to come in. So I think we've nailed it pretty closely to the way that they are measuring their range. So that helps you decide how and where you want to address the market. So the VIX weekly, we're right inside. Well, let's see, way up here, right outside rather. Um, okay, we're back inside the weekly range. So they were able to get it all the way up there, back inside the weekly range, which is fantastic. So, monthly range is crazy, still way up here. 23, 30, 37 day, trying to come back in. So 45.16 was our level today. Do I have this right? Hang on one second. I know, yeah, it is. I know my vol came down today. We got it down to 45 several times. It sort of hung on 45 a lot. Um, but now we're back up. Okay. And my term structure, we're just, really, really high. We're hitting quarterly three levels. That is a crazy high term structure. Crazy high. For daily range levels on the VIX. So this yellow line is a 1 day range, and normally it stays inside. This pink line here is the weekly 7 day three. Usually it stays underneath that 7 day three, and if it touches it, it comes right back in. This white line is the quarterly range. Why do I have a quarterly? I guess my monthly was too small. I moved it up. Um, but these are just gigantic, gigantic moves. Um, so let's look to see where we are tomorrow with Quick Strike for our contract. For Tuesday, okay. 5110 at 5231. And the high gamma, unfortunately, is up at 5185. Well, no, that's good. Actually, I'm sorry, not unfortunately. Very good. So our high gamma extends from 5155 to 5185. And really 5190, 95, and 5200 are high gamma also. So, and that's getting us down into to the 49s. $35 deltas up at 52.15. So we remain in high gamma coming down. Um, I mean going up. I mean, it's going down on the pricing sheet. It's going up in the numbers. So yeah, this is looking much more supported. Potentially up to, like I said, 52.15, or even better, if I can get down to the 20 delta, 53.20. But let's take a look at the quick sheet for tomorrow. What did I say that was? E2BJ5. $4,700 is today's developing open interest, sitting here at 5,200. So we're building some interest, some open interest. 5150 has got 2,300 on it. So the high downside strike would be 5,100. So it's looking a lot more bullish, and hopefully we can start getting the order flow to cooperate. There's just, if we get an overnight spike, don't panic. Um, it would mean that the foreign players are back in the market trying to short it. Um, so just rely on the dealers' structural support to come in at key areas and bring it back inside the distribution. Um, that's the hardest thing to do. It's like everybody was saying, don't step on a falling knife, and that's exactly what you should do. But it's with volatility this high, it's a game that not many can play. I mean, you could lose your account even if you're going in the right direction simply by how wide the swings are. When you get a 1 hour bar that is this huge, you're gonna you could lose everything in your account, even though you were right on the direction. What am I doing? That's not the ruler. Hang up a second. You know, 140 points. And here was a bar that was 291 points. I mean, this is crazy land, right? Um, at 12.50 a point, it's too difficult, really, to trade unless you can get very, very specific on your trade location. 51.52 was a good location this afternoon, bringing it back, playing that reverse to the mean, trying to get it back down to your daily ones, but you're going counter trend if you know, the trend was going long. So just be very careful in these wide ranges because, like I said, you can be going in the right direction. You could have been trying to position long in here and you could have just gotten wiped out because the bars are so big. It's very difficult trading in this um, level of volatility. All right, so be very careful. Let's take a quick look at NQ, and it just looks pretty much the mirror same as ES. Oh my gosh, 1,800 point day. Um, and it too had the same, you know, gigantic bar patterns that we saw in ES. We came down to 1.5 times the range. 1.5 times the range held the price. And then going up, this was 1.25. So we didn't get up to 1.5 on the upside like we did the downside, but 1.25 to the tick. Look at that. So our monthly range for the NQ, again, very structural. We got down to the 1.5 time the range on the downside, and we're coming back up. And we actually broke the threes briefly and went to the two. Look at that, the monthly two. So this is just, a game of trying to get price back inside the distribution, and it is going to take a little while. Take a look back at your term structure for Friday just to peek ahead and see if we can get any glimpse of where they might be sending it. No, there's no change. We don't know where it's going to go yet. It's still showing 5110. But we might look at what the open interest is for Friday, and you can see it's at 5,300. So that's positive, 5,300 to 5,395. All right, it's a couple of long puts. So that's what the market is keying in on. Where was my end of day volume? Yeah, just put land. Yeah. Open interest coming up to 5,300 and 5,400 for the end of the week. 5,354. 5,300 is at 30 delta, and 5,400 is at, that 18 delta, so just below the 20, still inside the 1 for that weekly contract. So the high gamma on this weekly contract right here at 51.95, 5,200, but 5,300 doesn't have, look, it's not too much lower. And that's where the puts are positioning 5,300 at 107. And so, yeah, I would say the bias is to the upside if we can get the whoever it was shorting the market out of the market. Depends on what their objective is, trying to disrupt our financial markets. Um, when 80% of the entire liquidity of the world's market is in the U.S. financial market, in the U.S. So, in the U.S. equity market, it makes no sense. They're just, shorting themselves. Hopefully this will turn around and we can get this back in the right direction. All right. So what do we have this week? We've got FOMC meeting and a decision on Wednesday. Wouldn't be surprised for them to talk about early rate cuts. They were advised to go ahead and they were given the green light, is what Jamie Dimon said, to cut rates. And so we might see that in response to these initial tariffs. And that would be also a reason to continue the bullish sentiment. So there's some things to look forward to this week, on a positive note. So if we can get our head out of the news, and because I know it's grim. Anytime you turn the news on, they're just bashing the market, and they would prefer to have the unequal advantage for some crazy reason. They think it would be better to be disadvantaged for the way that we sell our products to the rest of the world versus the rest of the world selling their products to us, instead of having it more even. More even reciprocal does not mean 0 to 0. More even means it's going to cost us a little bit more because we pay people more than the slave labor that's being charged, that are being paid in the warehouses in Bangladesh and China and places like that. So, um, cost of labor is more, and that is the cost of the cost of the tariff on our exporting countries has to be a little bit more to mitigate, offset that U.S. cost of production. And with that said, if they can just agree to a small tariff, we can adjust currencies you know, to mitigate against that small tariff. Um, it would work out without any extra burden or very minimal extra burden on consumers in either country. So I'm not sure what the issues are other than it helps grow their GDP to be the manufacturing exporting country. We get that. That's why our GDP has suffered so much. We have exported our GDP and our wealth as well as our national security. So, time to have some of it come back and bring some jobs, hopefully. All right, I'm going to let you guys go. The monthly 3 here at 17,875, 17,900 could provide a little bit of a problem because if dealer has moved their risk out from this 3, the monthly 3. They're not gonna wanna get it back in, but hopefully we can coax it back in and get it back up to these 1s up here, these 3s and 1s, 18,750 to 18,800, 792, 800. Because all of this is just fully hedged. I don't think they care if it goes back inside the 3s if it's fully hedged. They just don't want it back inside the 1s. I guess, that part I'm not real clear on, to be honest. I don't know if they the way this set up here with the 3 sitting right under the 1, they probably did, institute their hedge right here because this looks like it was the big takeoff bar. So it would come all the way back up to 18,657, 740, and potentially test that 792 or the 18,861 and then see what they're going to do. But getting it back inside 19,930 might be a tall order. But if we can just get back in this upper range right in here and get the volatility much lower, that's going to be very beneficial. So we'll see what we can do. Just move it back inside as much as we can inside these 1s at some point. We're at the beginning of the month, unfortunately, so we may be outside the 1s, but flat. So maybe we could trade. In this range right here, 17,167 through 18,304, exactly what it did. I mean, it might be just showing us that we're going to be, range bound flat for a while. Okay, guys, thank you so much. We will catch you in the morning.